This event is also part of an EPC long-term task force project we are bringing forward with the METI, Le Mouvement des Entreprises de Taille Intermédiaire, project that aims to explore the potential and the relevance of middle market companies in the youth economy. I am Francesco De Angelis. I'm a junior policy analyst at the European Policy Center, and I will moderate today's discussion. Allow me to provide a few background information to frame the discussion. As everybody knows, unfortunately, the sad event of the war, of the Russian invasion of Ukraine, caused an inflation and energy crisis, which have actually impacted the youth economic fabric. In addition, we have a tightening financial condition, which are again impacting business and economic competitiveness. Even if the outlook looks less dark than a few months ago, investment much needed for the green digital transition might be affected. All of this is coupled with global industrial competition, especially in light of the recent Inflation Reduction Act, which is perceived in Europe as an attempt to capture European industrial base. There is a fear in Europe that this would cause a massive relocation of investment outside Europe into the US. Moreover, some of the provisions embedded in the IRA, consumer production and investment tax credits, have discriminatory requirements, so local content requirements. The Commission, in order to react to this context and to this global competition, set out in early February a strategy, the so-called Green Deal Industrial Plan for the Net Zero Age. It was discussed in February at the European Council held in February, and of course it will be a subject of further discussion among member states at the March European Council. Today's event will aim to address some key questions. First of all, we will investigate how the current economic outlook will impact the business investment. We will explore what are the real challenges of the IRA for the European industrial base and competitiveness. We will also explore what are the instruments already in place at EU level to sustain investment, especially in the green transition. And of course, we will try to describe what should be the proper response at EU level. I am delighted to be the moderator of today's discussion, and allow me to introduce today's panelists. I would like to start with Arnaud Leroy, Director of Sustainable Development, Communication and Institutional Relations, Sphere Group, which is a leader in household packaging. Arnaud is a former chairman of the board of directors of ADIMI, the French Agency for Ecological Transition. Thank you very much, Arnaud, for being with us today.
Hello.
Then I would like to move to Marco Buti, Head of Cabinet of the European Commissioner for the Economy, Paolo Gentiloni. I would like to also say that after 35 years in the Commission, Marco Buti will take up the Tommaso Padoa-Schioppa Chair at the European University Institute. Congratulations for this achievement, Marco. Then I would like to introduce Michaela Holl, Senior Associate at Agora Energiewende. Thank you very much for being here in presence and fighting the adverse climate conditions. And last, but of course not least, I would like to introduce Laurent Braun, Director, Head of Strategy and Business Development Department at the European Investment Fund. Thank you very much, Laurent. So just a few housekeeping rules from my side. So the event will start with some initial statements from the panelists. Then there will be a discussion led by myself And of course, I would like to also receive a few questions from your side. We will have a Q&A session at the end of the panel discussion. So without further ado, I would like to start today's event. And Arnaud, I would like to start with you.
Yeah.
We would like to hear from you, actually, to have a sort of business perspective, on the ground perspective of the current challenges for you businesses, especially in light of an uncertain economic outlook and environment. For instance, are businesses postponing investment? And where do the main challenges stem from? Uncertainty of the outlook, inflation, input cost, access to finance, just to give some examples. And of course, we will be much interested in hearing from you, what are the main challenges for the European businesses to move forward a carbon neutral economy, especially in light of the IRA, but maybe there are also other areas which constitute a challenge for European businesses to move towards a carbon neutral economy. So thank you very much, and the floor is yours, Arnaud.
Thanks a lot. So good morning to everybody. So just give you a feedback from a mid-cap society. So we are, it has been said, European leader, more or less, in our markets. So household packaging, we've got 15 production sites across Europe, including UK, but we are in the frame of the EU. We don't go to outside the EU borders. So challenges are, let's say, numerous. You mentioned the war in Ukraine. We had the issue of electricity for a number of people across Europe, and more particularly in France, where the price for the electricity were and is still double to what we see, for example, in Italy or Spain or Germany. They speak today. So it's quite interesting to see in terms of competition and the investments that you need to do, for example, for energy efficiency. So this is really something that we have to go for, and potentially being supported as well as the EU level, because it's a matter of competition, the efficiency now, especially when you look at the price of electricity or gas. We are not using gas in our production, so we are not really touched. We were not touched by the price rise in gas, but by the electricity prices is made also taking into consideration the gas price. We were caught in this storm, which is really an issue in France. I don't know the situation in other member states, but when I look at the other markets in which we are acting and where we are producing, we've got a peculiar situation in France regarding the price for production. So this is really one of the elements. The second element, you mentioned it, and we see it from our people where we buy raw materials. They are thinking to move from Europe to Asia or to US for gas, for the energy price and the support they've got. So it's nice that Europe is taking care of this issue. It's nice that Europe is discussing. At one stage, we need to get action and decision to keep factories in Europe, because if they're gone, they won't come back, or they will come back in 10 years. So we are all engaged in a fight to secure industrial bases in Europe, and we need to maybe speed up the decision process in this aspect. So it's when I looked, I think we read the same type of newspapers. We see BASF, just to give a name, BASF planning to move certain parts of their production, which put at risk also all the other people using BASF products in Europe. I see we are buying some plastic products from BASF, raw materials that are including our materials. We try to stay and to keep a kind of European supply chain. It starts to be extremely complicated on a number of products. We saw it in medicines, we saw it in also type of products. And when you look at all the packaging issue, you see that basic materials you are using to create packaging, it's more and more coming from Asia. And we are one of the biggest customer and users of packaging. And we want, if you see the discussion we've got at the EU level for the future of packaging, we want to go for extremely high quality packaging. It will be a nonsense if we don't have the European industries being able to provide this high level quality packaging. So you see, it's really the discussion. So you're right, we've got IRA, we've got the price of investment, the price of money is start to be an issue. And we see that in Europe, sometimes we are weak in terms of potential alignment with some fund, hedge funds or investment fund. This is really an aspect as well. When you need to make investment, and we need to make investment to go for circular economy or for efficiency in terms of energy, you need money. And we see that in Europe, the pockets are, let's say, less deeper than what you see in US, for example. So even if we don't move in US, sometimes you see that US is coming and taking over some extremely important factories or brands in Europe. And this is something that we need to look at as well in terms of sovereignty, because the decision center needs to remain also in Europe. So it's part of the discussion we are facing. Mid-caps are in a peculiar situations because we don't have, we are not at the stocks. So we need investors or we need partners. And there it's really important as well that we find easily and more easily European partners. So it's something that needs to be said. And this last element of my introduction, you're right, there is some external elements which are hampering and putting at risk the industrial basis in Europe. And after you've got internal issues, which is visibility, notably, and stability in terms of regulations. And all the EU industrials are asking this. They don't say that they want to get, they don't want to beg less quality. That's not the issue. It's that we stick to the rules we agreed and we aligned for, let's say, 10 years in terms of, because 10 years is the price, the time you need to get return on investment, time you need to develop new products, for example. And this is really something purely internal to Europe. We have to get, let's say, a level playing field which is comparable to our main competitor, US. And if there is some industrial people around the table, you know what I mean, because Europe has an extreme advantage in terms of, let's say, investment done in the last years in factories. We are extremely performant compared to what is in the US, for example, in our sectors. And I think it's the same for a number of sectors. But we've got issues of stability in rules in Europe, access to the credit, and the fact that we need to react when we've got like a text like the ERA that put at risk some decision of investment for the near future, because people are questioning themselves. It was not the case like 2 or 3 years ago. Now we've got a competition to get, to bring factories and sites and production sites across the Atlantic. And we see with the fact that shipping, now the prices are getting down, extremely down compared to what we have seen in the last 2 years. It's more competitive to bring some goods from US or from Asia than to create and to build them to produce them from Europe. So it's something that needs to be, clearly looked at, and we need rules and tools to react more quicker, I think. That's it for me. Thanks a lot for your attention.
Many thanks, Arnaud, for bringing up to the discussion your perspective. Plenty of things to follow up on, of course. And now I would like to bring into the discussion Marco Buti, who has recently published a paper with Professor Messori, resetting the EU's business model after the watershed. And I would kindly ask you, Marco, if you could put this discussion to the broader picture of the policy debate, and especially we would like to hear from you how the energy crisis and the policy-induced shock of the IRA forcing us to rethink our business model, and of course what should be an holistic, a proper EU holistic industrial policy response. Thank you very much.
Thank you very much, Francesco. No, great to be here, and I hope you can see the screen that I'm sharing. Can you confirm?
Absolutely. Yeah.
Okay. No, that's very good. No, excellent. And I'm very happy to be here. Also, happy to be to talk after Arnaud, because I mean, some of the worries that he puts forward from a direct business and operational perspective are actually much in line with what we analyze and put forward in the paper you have mentioned, and something that I also plan to say in my presentation. Okay, you mentioned at the beginning that I'm a bit in a transition period, so take these remarks as you know, reflecting my own views and not necessarily fully those you know, officially of the Commission. Here the first slide, if you can see. Okay, this is the I mean, part of the context and much in line with what Arnaud said before, but in a sense elevating this at the macro level. Big challenge is to deliver in the twin transition. In the Commission assessment of at the end of last year, we put some figures on the investment needs for the green transition and for the digital transition. And you can see here in a very aggregate manner these estimates. Additionally, we have to provide an investment which is estimated of about 650 billion per year till 2030. Over 500 billion for the green transition, 120 for the digital transition, as you see here. We have also the Repower EU, which estimates an additional investments of 300 billion till 2030, and this was essentially to reduce our reliance on Russian fossil fuel imports. I have to warn here that the two estimates have different methodology, different sources. They cannot be, you know, simply added one to another. And also for you know, to remark that the Repower EU, this 300 billion, has elements which are not part of the green transition, but it gives you a sense, I think, of the challenges that we have in front of us. And what we are doing right now is actually to reassess these investment needs in the light of the higher energy prices, in the light of the Inflation Reduction Act. So we are going to publish next week the Commission service working documents with further refinement. RRF resources, so as part of the Next Generation EU, and I'll give you some numbers on that also. And broadly, the EU budget, I think, can certainly go a long way in you know, supporting these, satisfying these investments, but the resources will not be enough. Now, second part of the context, I think Arnaud mentioned that from his own business perspective, is the response to the Inflation Reduction Act. Inflation Reduction Act has about 370 billion for the green economy. So this is for accelerating the move towards the green economy. I think very welcome from the point of view of the overall objective. So the what is to be applauded, the how is raises questions. And the how is the fact that there is a a clear, protectionist twist to this proposal. As you can see, we start already from, and you can see the graph on the right-hand side, from the a situation which is of disadvantage in Europe. Here is the gas price, US versus Europe. So even with some calmer conditions lately, if you take the integral under the two, in between the two curves, you can see the competitive challenges that we are facing on the energy side. Three aspects are worrying. So the Buy American logic, tax breaks, production subsidies, and the two challenges that are in front of us is, again, what Arnaud alluded to, so the risk of relocation, deindustrialization. I think here we'll have to have an assessment which is a sober one. I mean, the decision on investment or decision on location, etc., depends on a large number of factors, where and the IRA only addresses one of those, but nonetheless, I think at the margin, and we have evidence also from businesses that are, in a sense, putting on hold investment in Europe and thinking about relocating at least some parts of the investments in the US. And so this is the risk coming from across the Atlantic. There is another risk which is linked to our own responses. The most precious goods that we have in Europe is our single market. So we would need to make sure that we preserve the integrity of the single market, avoid the fragmentation. And it is clear that if we would go towards an indiscriminate openness to state aid, so a free for all, that would actually worsen the divergences between EU countries, because the national pockets are different, and so the response has to make sure that we do not risk the fragmentation of the single market. Come to that in a moment. So Francesco at the beginning mentioned the Commission communication at the beginning of February in view of the European Council discussion. And this is a snapshot. Okay, it's a bit of a complex one, but you can, I think we have tried to encapsulate the essence of the many proposals in the Commission communication in this slide. So four big themes: regulatory environment, the funding, skills, and trade. What I can tell you already is that on stream number one on the regulatory environment, which is on the Net Zero Industry Act, Critical Raw Material Act, and reform of the electricity market, the Commission will come forward next week with proposals, so putting flesh on the bones in view of the European Council meeting of the end of March. So that is so this regulatory part would be very much at the center of the proposal of the Commission next week. And then there is the funding element, which you can see here, and so there is a state aid here also. In the course of next week, the Commission and DG Competition in particular, Executive Vice President Vestager, after consultation of the member states, will come forward with new provisions on the temporary state aid framework. I think whilst it is clear that there will be some changes in the rules, I think these will be contained and targeted and also limited in time, precisely to avoid that risk of fragmentation that I mentioned before. Then in the short term, we have bridging solutions, so optimizing funds that we have already under Repower EU, Innovation Fund, EU Invest EU, based on also on ongoing new need assessment, which I mentioned before. And for the medium term, looking beyond June, when we are going to have the reassessment of the review of the multi-year EU budget, so the MFF, the idea that has been sketched out by the President of the Commission of a EU sovereignty fund, and here focusing on critical and emerging technology relevant for the green and digital transition. This is the part that is public in the vertical coordination between the EU at national level, but most of the resources will have to come from the private. So here, deepening the capital markets union is fundamental for to mobilize private capital. As I often say, in many instances, and this applies to both the green and the digital transition, these investments are long in ideas, but often short in collateral. So thinking that the traditional banking activities could finance this investment is a stretch too far. So we need private capital, we need equity, and here capital market union is key. So this is the funding. Now, so far, the response that is in the making, that we have provided, that is in the making, look at the European Council of the end of March, which, by the way, will have also on the agenda the issue of the reform of economic governance, so the EU rules, macroeconomic imbalance procedure. So we will need to make sure that we have a coherent setting between how we respond to the competitiveness and green transition challenge, what I've indicated, but also how we make sure that we have an reform of economic governance and the new EU rules, which actually foster the reallocation of resources towards those EU priorities. But, and this is the point that we make in our paper, and I go quickly to the conclusion, and it seems to me also in line with what Arnaud said at the beginning, we will need to reset the EU business model. The crisis we are undergoing is different than the pandemic, and my sense is that it is more existential for Europe than the pandemic. So it is an asymmetric shock across the world. You have seen the graph before from the US and Europe on gas prices. It is clear we are in different worlds here. So it is asymmetric. The shock is asymmetric, and it is also asymmetric within the EU. Unlike the pandemic, it is likely to be non-temporary, not temporary, and reflecting a longer-term geopolitical shift. And the discussions that are going to take place in the next couple of days between the President of the European Commission in the US and President Biden, I think, and also in the relation to China, I think are key for that. And all this makes the EU energy intensive and export driven, somewhat mercantilistic model unsustainable. So this one will have to rethink the EU business model, higher investment, new industrial policy. And here what we claim in the paper is that thinking about European public goods, new European public goods to address the competitiveness and the green transition is the right way to think about that. And my final slide is this one. So if the European public goods are part of the response, what kind of European public goods to address the green transition? And here you have the cross-border energy infrastructure and clean manufacturing, cross-border infrastructure for sustainable mobility, cross-border digital infrastructure. All this huge investment in skills is also important to adapt the labor force for that. We have vehicles for this. So optimizing what we have already, and the resources are substantial under Repower EU, Connect Europe Facility, Invest EU, impose a project of common European interest, innovation fund. But what we will need to do is to reassess these resources and to convey more resources towards transnational projects, and all this, in a sense, coming to fruition in putting flesh on the bones on the idea of the European sovereignty funds that the President of the Commission has put forward, and which is still being worked on. And I think with this, I can rest my case. Thank you.
Thank you very much, Marco, for this comprehensive overview and to actually frame the discussion in the broader policy picture, and plenty of things to follow up on. You mentioned state aids, you mentioned sovereignty fund, and of course, all elements that we can further discuss on. And now I would like to give the floor to Michaela Holl. And would be interesting to hear from you what your consideration about the challenges brought by the IRA, and also the role of public financing for the green transition, and also what are the instruments already in place at EU level for financing the green transition. Thank you very much.
Thanks so much. Thanks so much for the invitation, and thanks for the questions. I'm glad we asked those questions, because frankly, it makes me a bit nervous to be on a panel with Mr. Buti, who was in my literature list 15 years ago. So macro, I wouldn't dare talking, but I think the questions you raised, I think I could have something to contribute. As you said, I work on green finance and a Green Deal in Agora Energiewende, where we have expert knowledge also on the industry decarbonization. And before that, I had extensive dealing when I worked in the European Commission on several EU budgets, in particular around funding of renewables. And so what I say is also informed from that today. So yeah, have we plugged the gap, the clean industry gap you asked? And then with a view of the IRA, my first statement is that the plug, if you only look at financing, might be smaller than you think it is. And that parts of the discussion in Europe about this IRA seem to underestimate what we have set up in the EU. Because if you look at it, Biden had only this tool because he cannot regulate, they don't have a carbon price. So, and he saw everyone else, China, Europe, going ahead. So all he could do is dump money, and frankly, there is an element of dumping in some parts of this law. Whereas in the EU, what we have a carbon price, which was significantly strengthened, and we've heard how difficult last year was, but the EU managed to agree on a package that extends the carbon price to transport and building, something that was not perceived possible. And we managed in this crisis with the high prices to do this, including a carbon border adjustment mechanism that when it first was launched also was perceived inconceivable. So we have a very clear regulatory framework that goes beyond the 10 years of tax credits, something that many investment banks have said, that what the EU has set up is investment certainty. We heard it from the first speaker, is crucial. Actually, the EU, with its regulatory framing, gives much more investment certainty, because you also know what happens after the 10-year tax break. And it's this holistic approach also, because in the end, the IRA chose a few technologies like heat pumps and batteries. But the EU is very competitive. And here I also come back again to the first speaker. We are very competitive due to this extensive framework on things about circularity. Much more could be done, I agree, on decarbonizing the industry, on, like, for example, large-scale heat pumps. You know, there's much more behind those that are in the focus now. So yeah, and then a final remark, half of the IRA is actually going into deployment of wind and solar. We don't need that anymore because we have been supporting renewables a lot. They are merchant in some cases. We don't need this kind of money to take into our hands in the same way. Is there a gap? Yes, there still is a gap, and I will come back to a few things that I saw on Marco Buti's slides. There is a gap, and so we're doing at the moment internal work to feed into this MFF review that is coming mid this year, because I think this IRA plus the MFF, I mean, this is really a moment to reflect here within the EU. Okay, how do we spend our money and what for? Can we do better? Because we think there's a lot that can be done better. So basically what we see, and that was also on Marco Buti's slides, the RRF is not enough to plug the gap. It is not. And we fear that once 2026 comes, which is the end of the payments from this pandemic fund, there will be a problem, in particular if we don't revise our fiscal rules, in countries like Italy, Greece, so Southern Europe, also Belgium. Why? Because our funding landscape at EU level is very tailored to Eastern Europe, because they were catching up over the past 20 years. So we've been adding up all the money they could use for clean energy. I should have brought that slide. I should send it afterwards. We have a brilliant slide. So where we basically pile up all the different modernization fund, everything that they can access. So for Eastern Europeans, we see they can actually broadly cover the clean investment needs. Also, once the RRF would be terminated, but that's not at all the case for countries that are in particular vulnerable with regard to budgetary, once the fiscal rules were to kick in again, and they don't have the same amount of money coming from those funds. We looked also into the quality of the spending on the RRF, which was also the last thing I worked on in the European Commission. So I was still busy setting up the renewables investment guidance there. And then we looked into it. And I'm super glad to hear that there's something coming out on investment needs assessment, because in our view, that's the big problem at the moment, that we have all these different EU funding programs that have their own story and their own objective, but they were not set up to do decarbonization, and they were also not set up to do competitiveness, let's be honest. Huh? I mean, and mostly when we look at what are the clean transition investment needs, so it's a bit broader than what you say, clean industry investment needs, so we look at all of it. The RRF covers 5% of those investment needs. That's what we've seen. The only exception is, and that's due to the hydrogen hype, that's a bit higher because there was a bit emerging hydrogen hype. So there's a lot in the recovery plans. But if you look at it, with the exception of Italy that put in a solar manufacturing plant, there's nothing around clean manufacturing in many of these plants, even though a priori you were free to do anything with the RRF, unlike with the other programs where there's eligibility and certain, criteria. You could have done anything, but there's not so much on renewables upscaling. There's not so much on manufacturing. So yeah. Okay, hold on. Let me just check on my notes. Yeah. So to wrap up, two things. So when we look into the MFF, we have to there should be much more alignment, as we said, with the investment needs, and not only this sort of how we do at the moment, the climate mainstreaming ex post. And for example, we are a bit deluding ourselves also in climate mainstreaming. Half of it comes from the CUP. And I mean, you don't have to know a lot about the CUP, but with this, you don't become a world leader in technology, right? So half of our climate spending is this. So we have to be a bit more honest about what we are actually spending the money on. And then I think there is a lot of money around, and to conclude, we have now spent, according to the Bruegel think tank, spent or allocated 700 billion euros only to contain the effects of the crisis. This is as much money as we put into the recovery fund for loans plus grants. The same amount of money just went out of the window over the last year, most of it into fossil. So that's the financial situation we're in. So we cannot replicate what the IRA has done. But there are other smarter things which I love to discuss. And with this, I stop, like, I don't know, the ideas on creating lead markets and for circularity, etc. And that would be interesting also to engage with the other speaker. Thanks a lot.
Many thanks, Michaela, for this overview about what we have in place at your level and what is missing. We will come back on the points you raised. And I think that actually your intervention allow me to bridge towards the next panelist, because when we talk about, of course, the instrument in place to sustain investment, we have to talk, of course, about what the European investment DAB group is doing, what the EIF is doing. And I would like to give the floor to Laurent Braun, and I would kindly ask him to shed light on what are, from your perspective, the main investment gaps of EU companies versus United States or other players, big players in general, and in the green transition specifically. And of course, we would like to hear from you, what is the role of the EIB in supporting investment with especially with EIB programs like InvestEU. Thank you very much, Laurent. The floor is yours.
Thank you very much, and good morning, and thank you for having me here this morning. As EIB Group, we are sitting in effect in between Marco, if I can put it this way, and Arnaud. We're sitting in between the policymakers on the one hand and the market on the other. And an important part of our role is to define and develop the products that we can then propose to the market, and that will at the same time meet the policy objectives of the European Commission and also other mandators such as member states that we are working with. Right. So I think I wanted to frame this because I think it's important. This is really the core of our action, and this is our raison d'être, if I can put it this way. I will focus in this morning a bit more on what we do on certain programs. I will mention InvestEU. I will mention Repower. I will mention also the European Tech Champion Initiative, which we have just launched. And I will also focus, of course, more on the green transition and digital transition, since these are, very much at the core of the discussion this morning. This doesn't mean this is all we do. This is, obviously a part of what we do, but I think this is probably what's most relevant for the discussion this morning. So first of all, InvestEU. InvestEU is a very important program for the EIB Group. We deploy, approximately 20 billion under this program, which is 26 billion in total. And that means financing that is significantly higher, because we put our own resources alongside InvestEU, and that allows us to effectively do transactions which are riskier and which provide higher additionality than what we could achieve with our own resources or with our own means. So this is really the value added of InvestEU. It's going where it is more difficult for the market to go. Having said that, it doesn't mean we do it in splendid isolation from the market. We work, and that's specifically the case now I'm talking about EIF, we work together with the market. So we invest alongside the market. I heard, the CMU mentioned. So I think that this fits squarely with the ambition of the CMU. We are there to catalyze the private investment, and we do it with a number of products essentially three main products that are relevant for our discussion this morning. A guarantee product, which is targeting loans and effectively helping banks providing more loans, larger loans, or loans to segments of the market that they would normally not cover. And then, as was said already by previous panelists, lending is not enough. We need also equity intervention. We need higher risk taking. So that's the realm of equity. And there we have two main products. One product that is targeting investment in companies, and in particular in innovative companies, startups, and the like. And then investment in infrastructure, investment in projects, in assets, in wind farms, in transport infrastructure, and the like. So these are the three main products we deploy. In the case of InvestEU, we had a delayed start, but I think we caught up quite a bit last year. We deployed already 208 transactions. 208 transactions at the level of the group have been approved so far, and that represents approximately 11 billion of the guarantee. That represents an investment mobilized that is around 70 billion. We had a very rapid start. This is also due to the nature of the financing of InvestEU itself, because InvestEU is largely financed via Next Generation EU, which sets very strong deadlines in terms of the delivery, and which means that a significant effort is taking place now in 22, 23, 24, as this is the focus of the Next Generation EU program. So this is what we do there. We see a very good, if I can give the feedback from the market, we see very positive feedback from the market, very strong take-up. Depending on the product, the demand exceeds supply by a factor of 2 to 4. And this is the demand at this point. So more is coming because we have calls for expression of interest which are out, and we every day we get additional demands. But at this stage, after a couple of months in the program, we have demand which vastly exceeds the capacity of the program. And when I mention demand, this is demand that has already been curated. So this is not any any expression of interest, but this is really something. This is really demand that is valid and that could qualify for those programs. Then next to InvestEU, we have together with the bank, we are complementing this with what we call our own contribution to Repower, which is also focused on green, clean energy, with focus on especially the development of innovative technologies, because I think everybody will agree that many of the solutions to the green challenge have not been developed yet, and they are being developed now by startups, by innovative companies, and we need to support them if we are to reach the net zero. And this program is also providing additional resources for infrastructure, in particular in an area which is complementary, I believe, to InvestEU, which is about the decarbonation of highly emitting industries. How to help industries that are, by their nature, cement, glass, etc., polluting a lot. How can we help them to decarbonize and to embed greener technologies in their processes? And then the third program I wanted to mention is the European Tech Champions Initiative, which we just launched with 5 member states: France, Germany, Italy, Spain, and Belgium. And this is very important. This is addressing a point that I believe Arnaud made very clearly, which is about the need for investment. And I think Arnaud, I even wrote it down. Arnaud said clearly we have less deep pockets in Europe. And I think that's very, very true. We see it in our portfolios. When we look at the startups we fund, we invest across all our activities in many venture capital funds. So these are the funds that are focusing on the so-called startups, so the companies which are bringing new products, new technologies to the market. We have invested in approximately 400 of such funds across Europe, and that represents several thousands of companies. When you look at the segment of the more mature companies, approximately 70%, and when you look at those companies when they need to refinance themselves, when they raise what's called in the jargon Series C, Series D rounds, which is typically the rounds above 50 million, above 100 million. So significant rounds where the company has proven its technology, the concept has been proven, but they now need to invest in production. They now need to, it becomes capital intensive. So they need the larger financing rounds. What we observe in our portfolio is that 70% of those investments come from non-European investors, mostly American investors and some Asian investors as well. So 30% financed by EU investors, 70% financed by non-EU investors. And I think that tells a lot. And I mentioned the European Tech Champion Initiative because it is precisely aimed at not solving the problem, because this is not enough, of course, but addressing the problem by bringing additional firepower, additional capacity, so that we can have larger funds in Europe that can support those funds. One of the issues is that we do not have large funds in Europe like there is in the US. We have in Europe 3 funds, which have AUMs, assets under management, above 1 billion. In the US, you have approximately 45 such funds. That gives an idea of the gap. And the idea with an initiative like this one is to help foster the emergence of more such funds that have the capacity to do those rounds, so that the companies have the option to be financed in Europe, stay in Europe, and compete on a global scale with competitors in the US or elsewhere. By the way, talking about the CMU, I believe it's also important in terms of attracting institutional investors to the asset class. In our conversation with pension funds, with insurers, we see 2 things. First of all, it is difficult for them to invest in venture. They have moved over the past 10, 15 years towards private markets because of a number of reasons you all know, low interest rates, etc. But when they have moved to private markets, they have moved to buyouts, not so much to ventures. And the few ones that have moved to ventures for typically a fairly small amount of their investments, they invest in the US. Why? Because simply there aren't enough large funds in Europe. So they invest in the multi-billion funds in the US, which I mentioned earlier. Those funds don't exist in Europe, so they don't invest that money in Europe. And so that's also something that we would like to help modestly, I think, with this initiative and help that develop further. It is not, by the way, it is not, I mentioned the 5 member states. It is also something which is, I think, close to the heart, I think, of the Commission, because there is a very complementary initiative, which is called Escalar, which is part of InvestEU, and which is also providing resources to this initiative. Finally, this is all done in the context of the climate, of a climate, very consistent approach to climate, which is aligned with the EU taxonomy. We are approximately now, close to 40% on a program like InvestEU. 40% of the investments are compliant with the EU taxonomy, as requested by the InvestEU regulation and the InvestEU investment guidelines. Now, looking forward, I think what are some of the observations that we can make? I think the first one is, has already been mentioned. It's on the one hand, there is stuff. There are a number of programs, but it's maybe not always visible, and there may be sometimes fragmentation on those programs. And I understand there are a lot of priorities to serve, but a program like InvestEU serves many different priorities. And an initiative like Escalar, for example, is only one of the many priorities of a program like InvestEU. And I think there is probably a reflection to have, and maybe this will take place in the context of the sovereignty fund, I don't know, as to ensuring that we prioritize the intervention where the impact is the largest. And this means making choices, because I don't believe we can support everything. And for the sovereignty fund, if I may, Sovereignty is a very broad concept. It touches, of course, the concept also of industrialization. Obviously, it has many different aspects. It's about scaling up startups, but it's also about protecting our industry. It's about protecting our infrastructure. It's about anchoring, anchoring at the level of the share ownership of critical companies, ensuring that the anchor investors remain in Europe. So it's many different things, and there I think we need to be very clear about what we want to achieve. So that's one observation. The second observation, I think, is that it's very important that those interventions are stable and provide visibility and stability to the market. In this respect, we face now with the next generation EU targets a very condensed delivery, but then a question mark as to what comes next. And the market knows that, because the market knows how the market is interested in what the EU does and how those programs work. So they understand that there is this uncertainty about future resources. There is a point to be made about adaptability, and indeed in making sure that we have instruments that are flexible enough to adapt. Because I think we have the instruments, we have the good products, the products work, and there are not hundreds of products. I think if you have good lending products, good equity products, you have the basic toolbox. There are variations, of course, but you have the good products, but you need to ensure that they can be used for different purposes and be able to adapt. And I think in the COVID, it worked quite well. It came at the end of a programming period, so there were less resources available, unfortunately. I think it worked quite well, but I think that's an important element. And then fourth element that I would mention is that it's important in all these activities to always maintain the market-driven approach. All these activities are market-driven, i.e. we propose products to the market together with the Commission, with the EIB, with the member states. We propose products to the market, but ultimately it's the market that comes to us and that, if I can put it this way, that it doesn't decide, but that, yes, that decides what projects they want to bring forward. Then we make the due diligence, etc. But it's important that we always work alongside investors, alongside market players, corporates, SMEs, and so on and so forth. So I hope I have addressed your points, and I will stop here. Thank you very much.
Thank you very much, Laurent, for this overview of the role of the EIB group in sustaining investments. And of course, I forgot to mention this. I should have mentioned before, but online participants can actually type their questions in the Q&A box, and I will keep track of the questions and, of course, pose those questions to the speakers. Actually, Laurent, I would like to start with you for the panel discussions, because as you know, the Green Deal Industrial Plan mention the role of InvestEU as a possible response to the IRA. And more specifically, the plan specifies that some of the procedures can be simplified. And I would like to hear from you what's, in your opinion, can be simplified, because we know that there are actually some administrative burdens in terms of state aid requirements, reporting requirements. If you can provide a comment on what can be simplified of InvestEU. Thank you very much.
I will provide my naive answer in a way of implementing partner of InvestEU, because I cannot judge what is realistic or not in terms of regulation and the like. I will give one or two points. The first is that InvestEU, I think, is a very powerful architecture, because you can see it as a framework that defines intervention in a number of policy areas, which are the 4 windows of InvestEU. So research window, SME window, infrastructure window, and social and investment and skills window. And then alongside a number of products. It's a very rich architecture, and it was designed to allow beyond the resources provided by the Commission to allow the crowding in of resources from member states via the member state compartment, which would then provide resources potentially coming from the RRF, but also coming from potentially other sources to InvestEU, so that they could reinforce the resources for such specific products, which may be relevant in their specific territory. And then a second feature is that it also allows the concept of what's called platforms, which is probably more geared towards the NPIs, which is meant to develop joint intervention across implementing partners in specific fields, so that you combine the resources and achieve greater impact. Unfortunately, even though we are working with certain member states on the member state compartment, and we are exchanging with certain NPIs on platforms. So this is a discussion that's ongoing. For example, on clean tech, we are having discussions to create a platform in the clean tech area with certain NPIs. We're having discussions with a number of member states on contribution to the member state compartment, especially on the guarantee side, the guarantee product, so that this is more lending to SMEs. So it's more the traditional SME that wants to invest to become greener. These discussions are ongoing, but we stumble sometimes on differences of rules, differences in the way the state aid, for example, treatment takes place, differences in the way the do no significant harm, so the climate criteria, are implemented between those various programs. And I guess this is coming from historical reasons, but I guess if there is a possibility to ensure that we have a stronger harmonization, especially between what is implemented via directly the Commission and the member states, that would greatly facilitate the intervention and would make InvestEU even more powerful and even more attractive. So that's I think a very concrete example of what could be reflected upon. I don't know if it's realistic or not, but that's the concrete example.
Thank you for your reply. And actually, I would like to follow up on with the other panelists on one issue, because we have been discussing about the instruments we have in place, the challenge brought by the IRA. But a key point, in my opinion, that should be actually flagged is that it's not just a matter of size, maybe, in the sense that one of the key features of the IRA is that it's simple. So we have tax credits. It's relatively simple for companies and consumers to benefit for these tax credits. And I was wondering whether actually a possible response to the IRA should actually basically imitate these schemes. Of course, this could be done, for instance, through state aid at the national level. But again, as Marco said before, this could, if we loosen further state aid rules, we might have an issue concerning the level playing field within the single market. So feel free to jump in. I don't know whether Michaela or Arnaud or Marco would like to. Michaela, if you want to go ahead, please.
Yeah, I guess it needs an honest assessment what we want, because so far what we've done is we funded excellence in a way, at the margins. And now with the IRA, I mean, my colleague was kind of joking, but I think that's the point. He said, so what is it? Now we want CAP for everyone? Basically, throwing out money for everyone without really choosing. And I have to say, it's funny when you're on panels. I was at the Commission's event on the hydrogen bank the other day. And then the industry representative basically was saying, yeah, but it's so complicated. And then we are not even sure if we get it because there might be a better project. I mean, you know, that's not something I would worry about if there's a better project that gets scarce resources. So so we really have to, I mean, and Vice President Vestager made this point also in a similar discussion 10 days ago, where she said, okay, this is also a massive reallocation from taxpayer to shareholder. I mean, you have to think about what you do and where, right? And I already said we have a different approach where we don't actually need that much money. On the state aid point, I actually there was a draft going to member states, which as happens a lot, leaked. And I think honestly, DG Comp has done an amazing job in simplifying, but trying to keep the level playing field. Very cleverly done. There's having a maximum that can go to one member state or one company, so that Germany doesn't fund. We mentioned already BASF, they want a lot of money. So we cannot, because the Italians cannot do the same. Very cleverly done. And then also waving into the structure, like faster notification for certain key technologies. And basically she said, we just took those that are in the focus of the IRA because there's a need to react. So I thought it was very cleverly done. And then, I mean, I know by working with or setting up those programs, how complex the EU funding landscape is. I mean, we have to think about what is a good governance, also maybe for the sovereignty fund. What is a leaner governance without giving up this? Because I assume we still agree we want to keep this funding excellence and not going to like a cup approach where everyone gets money, right? But it is diverse. I mean, all these acronyms. So there, I think we need to think about what could be done to make it easier, but throwing everything out of the window, I think we have a lot of good practice.
Francesco, maybe I may come in at this stage.
Absolutely, feel free to come in.
Yeah, no, thank you very much. I'm very much Michaela has seen the draft that has leaked. Okay, I'm not going to comment on leaked drafts, but you will see next week. But it is clear that the issue that I mentioned in my intervention, namely the worries related to level playing field, has been very much at the center of the attention when looking again at the temporary state aid framework. So again, simplification, focused on specific sectors, let's say IRA sensitive, with a time frame that is limited. And also, you will see that also on the issue of the tax credit that was mentioned, I think there will be some elements of easing on that front. So I think all this, I think having clearly in mind the need to avoid risks of fragmentation of the single market, nonetheless, I still think that complementing this national response with a powerful EU level response, which is mobilizing what we have in the short term in terms of bridging solution, but also looking more strategically to the medium term, so here encapsulating the sovereignty fund. I think this is the way to go. I mean, just maybe a couple of words also on what other panelists have said. I think Michaela, again, I think a lot is on the green transition in the RRF. I mean, about 40% of funds go into that, so it's about 250 billion euro. I think the point here, I take some of the issues that you have indicated. I think what is basically lacking mostly in the RRF is that these are purely national projects. at the end of the day, when we put forward next generation EU proposal in the first place, we had dedicated a substantial chunk of the resources to what one can label, I mean, maybe loosely European public goods. When it came to the negotiations in the European Council, actually there was the overall envelope, 750 at the time, so it in current terms is over 800 billion, was kept, but there was a reallocation between transfers to member states, which was increased, and reduction in the part that these transnational projects. And this, you know, the political one understands the political economy of this, but clearly there was an issue here, and we honestly, we have not been able to, let's say, recreate European public goods bottom up by providing incentives to member states to actually in designing their recovery and resilience programs to actually do this, you know, put resources in this joint projects, these transnational projects. It happened only very marginally. So I think this is what one should look at if one looks at the sovereignty fund and optimizing what we have in terms of the vehicles, which you have seen in my previous slides. I take, for instance, the European, important project of European interest. For the moment, these are, let's say, purely national or transnational, but there is no EU, you know, financing to that. Back in these projects, I think we should probably think about something on that. I think on that front.
Maybe if I can, Francesco.
Absolutely, Arnaud, the floor is yours.
Simply because I've got a feeling I'm the only one acting industrials around on the panel. So one of the few elements that you have to keep in mind, we have the chance in Europe to get mid-caps. It's really an asset. We should be careful not to lose them. So one of the elements in the tools that will be proposed or are currently proposed is also simplicity, because simplicity means reactivity and speed. And we have to keep in mind that our job is not to go to seek for support, for public support or subventions or state aid. Our job is to, let's say, try to grab new markets, to stay on the markets we are. And sometimes we've got difficulties due to external elements, which is the current situation. War in Ukraine, not finished. Still weaknesses due to the COVID period. And now the unfair competition being pushed at a level where we never seen before by US, because we are speaking about unfair competition. Let's put words on the situation. It's unfair competition. We know that WTO is dead, so we have to react on our own, let's say, with our own tools. And I understood, I agreed on the fact that we don't have, you know, a lot of money, but the situation is really peculiar as well. So we do not have time to go back to, let's say, a kind of discussion about the article on treaty and everything. It's what will be the reactions to secure industrial bases in Europe, to keep people employed, and to avoid a social explosion, which is, I mean, for us, is the three questions we are facing. It's something that needs to be as well, I think, addressed and understood by all the people designing tools, that we are not all in Brussels like 12 or 15 hours a day to understand the way it works. It's already complex to understand the way national systems are acting and working based on the EU frameworks, for example, for the state aid issue on energy. So this needs to be also, I mean, kept in mind by you guys designing the tools, because we are not all Total, Thales, Airbus, or BASF. And this needs to be as well, I think, understood, especially when we are in competition for projects. It's nice to say, okay, we have to finance and subsidize the only, let's say, amazing projects in terms of innovation or whatever. But if you look at the transition will work if we manage to bring people from the brown or gray area to the green, not only by putting money to green's new solution. It's my feeling. And as you said, Francesco before was the head of the biggest environmental transition agency, public agency in Europe, ADEME. We had a specific public fund, and we worked with the founder of Laurent, the institutions. So we know this, and it's the easiest way is to finance only newcomers. But how you bring the huge bunch of people from all over Europe working and trying to work on new materials, new process. They are not green. They maybe have a different price in access to the money, especially when you look at the taxonomy issue. But it's a huge layer of activity in Europe. So what we do for this type of sectors, it's something that needs to be also addressed, and we cannot only bet on innovative solution. It's important to keep them, but you've got a huge bunch of people sitting in the train. What you do with them? It's one open question to the panel.
Go ahead, Michaela.
Arnaud, just so I understand, right? So I Googled before, so you do packaging. So what exactly in the IRA is that you find for your business threatening, just for as a matter so that I comprehend which bit of what they subsidize is for you threatening? And then a second question, if I may, what I have observed, and there I see indeed an advantage of the IRA, that it is maybe easier for the new entrants to come in because it's completely bottom up. Whereas many of the EU programs, you need the member state endorsement. And maybe I would say there could be a certain bias towards, like you say, the big ones, Total or the incumbents. I mean, I've seen how the recovery plans were drafted. They had to go super fast, was drafted by the National Finance Ministry. Maybe, the innovative circularity business just didn't have the access. Would you agree to that, Arnaud?
I agree to that, because I think circular economy is still, let's say, and when you look at where the money is going, you have a huge bunch of money for energy, renewables, innovative solution. For circular and resources, it's something like it's really poor at the moment. You're right, we are not directly touched by the IRA stuff. But what I explained this morning, it's when we look at supply chains, where we buy materials to build our own, to produce our own products. They were in Europe. Now we've got one brand in Europe able to provide us with parts of our solution we need to build to produce our own products. This brand is now saying that they will quit Europe. So in terms of independent sovereignty, our main people able to supply us are in China, for example. And we try to look for new providers, but extremely hard to find. And when you look at sovereignty issue, when we had the COVID, our brand, we've been asked by the French state to produce a number of solutions to protect the hospital people. Surblouses in French, like equipment that you put above you to. At the time, we believed it was really important to limit all the contacts. We saw directly that Europe was unable to produce sometimes like really, which we may think it's unnecessary or not complex products, but we need this product in your daily life. Refuse bag, for example. We are one of the biggest producers of refuse bag in Europe. So we try to use recycled products. We were, before this meeting, I was discussing with people in Netherlands to create this huge market. And you're right, the single market is really an asset that we need to protect and promote, especially when we look at circular economy. But we have to look at, the second row and third row as well. If we want to keep a kind of sovereignty, it means that we are able to do a bit of everything in competitive manner. That's the way we are touched by the IRA. It's that we see difficulties for partner and industries. We are discussing innovation in partnership. We say, okay, guys, we think the market needs to go in these directions. We see the new regulations. Which type of products or which type of elements could you provide? And the way we can discuss to share, for example, the cost of development or whatever. This is really important. If we lose this partner, we will be alone. And tomorrow we won't be able to invest, for example, in research and development, or at a cost that put us maybe in a weakest position. So that's the way people will be indirectly as well touched by IRA, in my reading.
Can I just add one point, and then maybe other panelists can chip in. I mean, I understand fully the points that Arnaud is making. So what the Commission will come forward with next week will try to address some of those issues. I mean, when we are going to publish the Net Zero Industry Act, the Critical Raw Material Act, and these are, the objectives of this is to support the industrial manufacturing capacity and strategic projects and via faster permitting, developing European standards. All this it is not the money, it's the regulatory element, but I think should help on that front. And also the Critical Raw Material Act to ensure easy access to critical raw material. So I think we tend to focus on financing, and that's important, but we have a regulatory budget between beside the actual financing. I mean, there is one point I think it's important for us, and I look at this from a more macro perspective, and it concerns about the sovereignty issue. I have to say personally, I do not like the Made in Europe concept. We are a continent of transformation, and we are going to continue to be so. So I think here the point is to make sure when it comes to critical raw material, the value chains, the robustness of this, and the overcoming the one directional dependence. So we'll have to establish with partners a two-way dependence on value chain. So I think as we put in the paper I mentioned at the beginning with Professor Messori, I mean, wish it is more made with Europe rather than made in Europe. I think the fortress element is something that is not going to be at our advantage looking forward.
Thank you, Marco. And unfortunately, we are running out of time. We have just 2 minutes left. I would like actually to pick up a question that online participants has typed, and it concerns the outcome. What outcome can we expect from the meeting between Biden and von der Leyen on Friday? Maybe Marco, you would like to say a few words on that?
No, I
and
don't.
Especially, yeah.
I don't want to say anything. I think let's wait till Friday.
Fair enough. Thank you.
Can I jump in just to comment on what Marco said regarding this concept of Fortress Europe? I agree, but we have to also adjust the political answers to the momentum. And sometimes I've got the feeling Commission is still in the 90s, where globalization was easy, it was a main line. Today we see it's slightly different. And it could be really important. I'm sure some people have got the same type of discussion and language that I have got this morning, that we ensure that we are in the right period in the analysis. We are not anymore in the late 90s, early 2000, where globalization was easy, no problems. Today we see India, Brazil, China, US, they play a different game. So we should not be the only one trying to play a game where we are losing, but we stay fair play.
Can I
Thank
also
you,
share
Arnaud.
one last? Can I also share one last thought? I'm sorry,
Yeah.
I'm seeing this.
As
No,
quick
very
as
quickly.
possible, please, because it's
Yes,
already
very,
half
very
past.
quickly, just on the, because
you,
we
Laurent.
have this thing of the sovereignty fund, which is kind of a cloud hanging above our heads. Nobody exactly knows what it will look like, but it seems like it will come. My plea is the following, and it echoes what Arnaud said earlier. First of all, this shouldn't be only high tech, because high tech is important, but that's not the only thing that needs support. It's not the only types of companies that need support. And sometimes I'm hearing a lot about, deep tech, investing in deep tech. Again, very important, but let's make sure it's not exclusive. And the second thing is that, as I said earlier, InvestEU is running out of money by the end of 24. So the last 3 years of the programming period, 25, 27, there's barely any resources left. And I think we need also to ensure that we have stability in those types of support, because InvestEU has the strength that it provides not only equity, but also, as I explained earlier, guarantees. And guarantees are the instruments that are covering literally hundreds of thousands of small and medium-sized companies around across Europe. So I'm sometimes a bit concerned that we are now all going to focus on the sovereignty fund, but then forget about the good things we already have put in place. But maybe I'm wrong. I hope I am. Thank you.
Very much. So in the interest of time, I would say that we can close the event here. It was an incredible, interesting discussion. I would like to thank all the panelists and also the participants, especially the in-person participants, because they managed to reach the EPC premises, notwithstanding the weather. So thank you very much and have a nice day.
Thank you. Bye-bye.